There's so many different aspects to trading. But I would say not over trading, having a good foundation and learning some good techniques.
So, John Kurisko, welcome on the podcast. How's it going today?
I'm doing great. Thank you very much.
It's a pleasure to have you here. One thing I like to begin with my interviews is, what is one quote that inspires you?
I mean, I have so much to talk about being a trader. I'm a technical guy at heart. You know, I love figuring out puzzles and stuff. So trading for me as a technical chart reader is really drives me. But I'm also, you know, I enjoy teaching what I've done. You know, and I've started a long time ago. I started in the early 90s learning the basics of trading, and I've realized that was my my vehicle to do something for myself. I didn't want to get stuck into the what do you call the rat race, and everyone always said, oh, you know, it's great to get a great job, you'll get retirement, you know, then you'll be set for life and stuff. And I was like, you know, I don't want to work all my life and do something for someone else and not, gain those benefits. So, you know, when I noticed what trading did to my mentor in the beginning, he was able to travel a lot, and I love to travel, and it opened up a lot of avenues. I was able to, you know, just like I said, travel. This is something that you could set yourself up and you could do anywhere in the world. I see, you know, being in Bangkok, I'm like, wow, that's great. He's in Bangkok. You know, I mean, you probably moved there from somewhere, right?
Yeah, of course. I was in Canada before.
Canada. So, wow. So, that's like a dream of mine too. It's like, not anymore, but back when I started, I wanted to travel a lot. Right now, it's, you know, figuring out the markets. I love it. It's a passion for me. I wouldn't want to do anything else. It gives me the freedom to be with my family. It gives me the freedom to do things that I want to do.
Awesome. So for people who don't know you right now, you are the host of the Day Trading Radio, also a full-time trader. I believe you trade futures and stocks as well.
Yeah, I trade futures and stocks. Daytradingradio.com is the site, and there's a story behind that. You know, when I was trading and stuff, I moved down to Florida, and at the same time I was trading, I was into electronics, and I was actually into pirate radio or low, broadcasting. It's called pirate radio, but it just low power broadcasting on the FM frequency. And I did a lot of experimentation with that, and I always did shows at night, you know, regular radio shows. So it was always good in being on the radio. But I also traded during the day. Up here in New York, when I started doing all this, it was you know, I trade during the day and go on the radio at night, play music and stuff. And I ended up moving down to Florida when I had my first son, and we couldn't really do I couldn't do the pirate radio down there because it was kind of against the law. So I ended up, getting into streaming just learning how to do radio online. This was back in early 90s. So we were just starting out streaming. There was no really YouTube streaming. There was some companies out there that did streaming, Mogulus, which ended up being live stream, and some other ones. So there was a couple other ones. What was the guy's name? It was called. It was one of the original ones. But I started trading on those. I said, you know what? Let me learn how to do this. While I was trading, all of a sudden I found out I could start trading and broadcasting my trading. And people started tuning in and watching it. I was doing it for free for about a year. And I started putting up a donation little button, and people started donating every day. And I was able to actually make a good living out of it. And I told my wife, I said, this is something I want to pursue. I think we should go back to New York. So we ended up going back to New York. I happened to grab the name Day Trading Radio because, you know, if you're into the internet, it's important to have a good domain name. And that just happened to be before everyone started really getting excited about domain. And so I was able to get a good domain name, and I built the site, and I started doing my trading during the day live on it. And I was charging very minimal, like $9 a month. And before I knew it, I had 600 subscribers, and I just moved back to New York and got an office, and it grew from there. So that was back in that's when I started the show. I actually moved to New York and started the live show here about 2007, 2007, 2006, 2007. So that's how Day Trading Radio came about. And that's what I do now every day from 7 o'clock in the morning until 4.
Cool. So what made you begin trading in the first place? Why did you want to jump into that? And how did you keep going?
Oh, well, like I said, I was working at the post office at the time, which is, to deliver mail here. And it was a good job. I got out of school. I was, I didn't really have much direction. I didn't know, I wasn't really into trading, but I had I owned a martial arts studio, and I was teaching martial arts at the time. And my instructor was a trader, and I never knew what that was. And I ended up going to, starting to hang out with him during the day and seeing what he did. When I got off of work, I'd go down to his house and see what he did. And he explained to me about, all this stuff about, setting the alerts and looking at charts and what this chart meant, what resistance meant, what everything meant. And then I just grabbed onto it, and I said, this is why you're able to go to France all the time and you don't have a job. Is this the reason you're not working doing this? He goes, yeah, this is what I do. I said, wow, I want to do this. I don't want to work, I want to not realize this is the hardest job I've ever had in my life, but it was something that's what drove me. I said, I want to be able to have that freedom to travel. So that was the main thing, being able to travel and live where I wanted, and being able to do a job, not have a boss, things like that, the American dream, or the world dream. Everyone wants to do it. So I just opened up an account with Charles Schwab, 92. My first trade was with the original AOL. I remember I made about $400 on it, and I was hooked. And I started, putting that seed in my head. I said, in about 2 years, I probably want to quit my job, and I want to try to do this. So in 1996, I quit my job, moved to Florida, and became a full-time trader. In about a year, I blew up my account, and I got my job back for a year. I went back to New York with tail between my legs, got my job back, worked for another year, saved up $12,000, and quit my job again. And I did it again. And that time it was just heading into the tech bubble, the bull, 98, 99, 2000. You couldn't not make money. So I ended up making a lot of money. I took the $12,000 and I turned it into about $600,000 in 2 years. Traveled all over the world. I traded for France for a while, from France, Spain, Switzerland, England, and just traveled and lived the dream I wanted to live. And but I didn't put too much credit into that after the tech bubble came about, because I gave most of that back during the tech crash in 9/11. And then just having to rebuild that. My trading really got better when I had my first son, because at the time when I was a bachelor, I didn't really know the value of what I was doing. I kind of, there's an old Jimmy Buffett tune. I made enough money to buy Miami, and I blew it all. You're not knowing, not investing it properly, not buying real estate, doing things that you could have easily done back then. But as a trader, and you're pushing these buttons and you're seeing these massive gains that you can be making overnight, $10,000, $5,000, whatever, $2,000. It was unheard of. And you'd go out and eat, and you could have whatever you want. And every morning you get up and do the thing, and your stocks would be up. And it became monopoly. It was like monopoly money. I lost value. I lost the whole concept of what money was valued at. I took advantage of it. And like I said, once I got real responsibilities, I buckled down and I started trading, and I started really making this job a business. And I think that's what I try to teach now, is how to turn trading into a business. The proper techniques, the discipline, the patience, having a business plan behind your trading is so important. Being able to get up in the morning, know exactly what you're looking for, not gambling, not smoking the hopium, the hoping that trade continues, knowing, what the market says. Over time, it just takes time to get that. I would say there's easy a 5-year learning curve in trading. Easy a 5-year learning curve before you start to realize that, nothing works perfect, and then developing your mind to um, take advantage of the things you learned. I always try to find someone's passion. Like if I would ask you, what's your passion other than trading? Maybe you're great at something. Maybe you love doing something other than, and the reason you're great at it is because you're passionate about it and you spend all that time and you want to talk about it. You want to get other people involved in your passion, because doing it yourself, that's great. But when you could share that with someone, it's even better. You feel alive. You feel like you could, wow, this is great, but I'm not going to do that. I don't want to go at this alone. It's going to be a lonely journey. But if I could bring other people with me and share my excitement and see the excitement they have from my knowledge, that's what I love. I love the excitement.
What makes the difference between trading normally, like you've done, I guess, before, but treating it like a business? What did you have to do to be able to move to that trading like a business aspect? What did you have to change in your trading?
I had to organize myself. I had to force myself to take profits. I had to force myself to take trades. I had to be more disciplined at getting up in the morning and not just saying, well, I'm not going, I'll wake up whenever I want and hopefully my stock is up or down, and just being there. What I did was I wrote it down and I built a methodology. I called it my methodology, and it's what I kind of teach right now. It's called a high probability methodology, and it's just knowing that not everything works in the market, but there is things that will give you the edge. And going back to what you're passionate, say you're passionate in gambling, and gambling is a great example for trading. A lot of people don't like to use the word gambling and trading together, but it really is, because you can't predict what's going on in the world. You don't know if there's going to be news the next day. It's going to cause the markets to, unless you take everything off and you're trading flat each day. But if you were great at gambling or you're a great blackjack player, you would know how to sit down at that table and set those odds in your favor, knowing when to take a hit, when to split, and do things. And these are things that have been mapped out for you by experts going forward and said, this is not an easy game. But to get a slight edge in it, you have to follow these rules, because it's proven statistically, it's proven to do this. And that's what I've done with trading. I've taken certain indicators, combined them, wait for a certain setup, write it down so I know when it's written down, and I know I wrote it down. I said, well, this is something that I know works. I have to take it because I have the statistical edge in my trade to do this. And then I have, techniques to take it out, and I take it out, and that's a trade. And that's my business plan. My business plan coming in every morning is to find a certain trade, take it, and then move on, and not worry about what happens if I got out and it continued to run. What if it didn't work in my favor? But it's very hard to get that mindset into being, I'm going to work each day. My business plan requires me, someone's business plan might be making cars, or you have to sell a car, you have to do this. And mine is to identify a certain trade, execute it, know where my stop is, know where my profit is, have a trailing stop for additional, and it's just, everything is all planned out for me now. So I think that was the main thing of what made me more successful, is having that business plan and applying it.
Speaking of which, how would you define your trading style these days? Is it more lower time frame, higher time frame? And what do you like to look for in the markets?
Because I do the show, I'm kind of have to cater to people who are short-term traders and people who are long-term traders. So I do a little of both. I have a thing called my watch list, my high probability watch list, which is a swing trading watch list, which I look for these certain setups, which are divergences in the market based off stochastics. Stochastics is one of my main indicators I use, and I use a divergence indicator with that. And on top of that, I use pattern recognition, trend line, support and resistance, some other basic, things that go along with trading. But the truth is, the stochastic oscillator and the way that works has been a game changer for me. I cannot tell you that how much I cannot go and just look at someone else's trading style, because I know my trading style is the most successful trading style. I hate to say that, but I know it. I know it because I see it happen and I teach it, and it's easy to see. And the mistakes, or not even the mistakes, the times it doesn't work out, lots of times we could, chalk that up to news or being in the market at the wrong time, being in a certain volatile area where news is being released, or there was an algorithm hidden or a buy program and stuff like that. There is the pitfalls of trading, but if I stick to that game plan over time, I will continue to be successful.
Do you trade the same thing on the lower time frame than the higher time frame, or just modify a little bit for different time frame?
Yeah, good question. Like I use the same technique on both time frames. Same exact technique. It works great on both time frames. The stochastic oscillator, I don't know if you're familiar with it. There's so many different things we could look at. We could look at MACD, we could RSI, relative strength. But the stochastics were put together in the 1950s by this guy, George Lane. And if you read his story, he had a trading club in Chicago, and it was very interesting how he came about this momentum type of trade. And I was gifted a personal notebook of his. He's passed away a long time now, but I had one of his students kind of come by the office one day and drop off this. And I started going through with this, and I've already applied his techniques, but I didn't have all the handwritten little, special stuff. And I said, wow, started coming together, and the way he explained it made a lot of sense to me. So I applied those rules, and I continue to apply them today with my own little, tweaks to it. And that's what I truly trade with. It doesn't get that much. It's not a complicated, magic or, smoke and mirrors. There's something I could show you, look for. And if it shows up 90% of the time, I'll show you a move in the direction of that divergence. The hard part is taking profits and pushing the button when you do see a setup. A lot of people, and I don't think you have to deal with this with Forex, but you have to deal with, especially with trading, futures trading, or with options trading, not with futures trading, but with the stock trading and options trading. Over here, we have the pattern day trading rule. And it doesn't allow you to trade effectively because it limits your ability to get in and out of the market. You're only given 3 trades in a 5-day period. So if you're in a swing trade and your trade goes against you and you want to hold on to your trade, you end up holding on to a trade longer than you should, and ends up, so you really have to start off with the right amount of capital for everything to be working properly. You can't be going into trading and not trading at your effective ability and taking trades off when they need to come off, or getting into trades. You need to be able to take these trades.
Yeah, if you want to share a setup or something that could be interesting for people watching, I'm sure people will appreciate, and that could be useful for some people as well.
All right, that's my big screen, and this is basically what I show during the show. I have my S&P or E-mini contract underneath here, and then we have our stocks that we typically are looking at. We might be day trading. They're usually momentum stocks, which really don't, in this day and age right now, to 2020, kind of in the middle of the COVID thing, and we've seen a resurgence of traders as people are stuck at home. So there's a lot more interesting, we're seeing the Robinhood traders that you get Robinhood over there in Bangkok, but there's just a lot of new traders and a lot of new capital coming into the market, and short-term, fast moving traders. And they're moving a lot of stocks pre-market. So I've adjusted some of my trading to the pre-market activity. It's just catching runners and just getting on board. But typically, if I'm going to start teaching someone, I'll explain to them I have a set of stochastics down here on the bottom, which is called the 9-3, the 14-3, the 40, and the 60. These are all my stochastics. But the really ones you really only want to pay attention to is usually the 9-3 and the 14-3. The fast stochastics. The 9 is a percentage K and then a percentage D. And not to go into a whole lesson about stochastics, the 9 represents how many periods you're looking back, or how much data it's taking from your chart. So you're looking back 9 periods. I say periods because it's whatever chart time frame you're looking at. Right now, I'm always looking at the 1-minute time frame here, so I'm only taking in 9. And what I'm looking for, and here's a great example of it right here. And it's a great example of it. And like I said, if I could see a divergence, I could give you almost a 90% probability of that divergence showing you a move in the direction of the divergence. Now, my divergence, and actually, this is a lot of times what I might go over when I'm looking at divergences and explaining what a divergence is, with the price. This is the bullish divergence, and it goes over George Lane's here. But as your price is moving down, this is the case of what we call a bullish divergence. If you see the price making a series of lower lows and lower highs, the low and the lower low, where the stochastics underneath diverge from that. Actually, it's convergence, but we call them divergences. It makes a low here with the first low. It's two-part setup, the first low and the second low. And when you make a new low on the price or the stock or whatever you're trading, this could be Forex, it could be anything. It could be oil, it could be gold, it could be futures, it could be anything. But your stochastics on the underlying oscillator is actually making a higher move. That means the momentum has shifted internally. So what's great about the divergence and what's great about the stochastics, it's almost a leading indicator, where most indicators are lagging indicators. You get the signal after the stock has moved, you'll see the indicator move with the stock. But in this case, you're able to predict the movement because the stock is making new lows, but we're actually seeing that the stochastics are actually starting to turn. That gives us an idea that we're probably going to get a change in trend right there. So that is what we're always looking for. And on the same side, on the bearish side, we have the same thing. Prices making new highs, stochastics making new lows. And that tells us that we probably have a bearish divergence. And what that's shown me, and George Lane did this in a great way, is if you picture a rocket going up and you have an engine on the rocket, what happens is your engine will die out, but your rocket will continue to fly a little higher because of the momentum before rolling over. So this is what basically stochastics are doing. The stochastics have run out of the engine of the stock, or the movement of the price has run out and drops off fast, but the price continues to move up a little before turning over. So that is a perfect example of that. And then, like I said, for my criteria, my business plan, I have to write down everything. I write it down and explain it. You want to have a low, you want to have a pop, and then a lower low, but a higher low on the stochastics. Now I have this, I could share this with your listeners. I could send you the whole format, the whole webinar. This is, I don't mind sharing this or anything. It's a really good webinar, and has all my charts on it. It has all the criteria of all the setups and stuff. It's really good. So I'll send that to you so you could share that. So now that we know what we're looking for, I want to kind of get that going. I could point out one right here. As you can see, the price is moving down. You have a low here. You have a low here, you have a low here, you have a low here. And the stochastics at this point, you could see, at this point, between this low and this low right here, and this low also is coming in with the 200-period moving average and the VWAP and a reversal candle. But you could see down here, the higher low versus the lower low. So the lower low and the price, the higher low on the stochastics is our buy trigger. Once we establish this turning back up, which you hear the indicators in the background sometimes identifying for us, your stop goes right underneath, one tick underneath candle. That's where your stop goes, and your trade effectively is in action. And then at that point, you have to really, like I said, that's the easy part of the trade, is actually getting into a trade. The hard part is being able to measure how far it's going to go. And I use multiple time frames for this. When I'm 1 minute time frame, just like you get overbought and oversold, typically I take my profits on a 1 minute time frame. If I'm hyper scalping these things, I want to get the divergence and then get the move. But there is one thing that's great with divergences. When you have a divergence and it comes inside of a pattern, and a slight pattern like this, 90% of the time you're going to break out of the pattern. So once you have the divergence, you know your target's going to be above this trend line. Now this target, of course, is run really nice. And this is a typical move out of a divergence, And again, it's very hard not to confuse this, because it's only one way you could see this. It has to have a low. Typically, the stochastics move around with the price, even if you're dragging down here. The other criteria is it has to come under 20. This bottom line is the 20 line. The top line is the 80 line. The other criteria is the first low has to be kind of under the 20. The second higher low has to be above the 20. The higher this move, the steeper, what I call the steeper this line, the stronger the setup. Also seeing that divergence on the 14.3, which is important too. And then once you start to see divergences on the 60.10, which kind of represents a 5-minute time frame, like I said, if I start to see this, if I go to the 5-minute time frame and I see my stochastics are rotating up, I'll probably want to be in this trade much longer than a 1-minute time frame trade where I'll take maybe 2 or 3 points. Maybe I'm going to go for 5 or 7 points on this. So that's a great example of a divergence right there. And I could scroll back, and typically on a buy side divergence, this is exactly what you're looking for, a reversal candle. So if I do get a reversal candle on this, I will, really point that out during the day and typically trade that. And then we could just go back test and just say, all right, you know your criteria. Let's just go back and see if we see that criteria anywhere else. And really a good, I'm not seeing anything on the buy side here compared to what we were looking at before. I want to really see this steep divergence here. Remember what the criteria requires. This second higher low has to be higher than the 20 line. I don't want a borderline. I want to have a good space between 20. The steeper this line, if it was even higher and turned up higher in some cases, that would be even better. This is like a 20 degree angle. And that's the bread and butter. And the same thing on this, on the sell side. And sometimes they, I might get 4 or 5 setups a day on it. Or sometimes it could be 10. If you tighten your criteria up to just look for these on the 5-minute time frame, you won't get as many, but you'll get more quality setups. This is very close to a divergence right here. And again, 1-minute time frame, you might say, well, that didn't really move higher. Well, if you could recognize that divergence and start, well, that's not a really good divergence. That's not one that's not a qualifying divergence anyway. So I'm not seeing any other there, but it was funny that we did have a great example right here, right when we were looking. So that's the example. Market's actually pushing up the highs right now. And I look for these in stocks for my swing trades. If I were to show you many different, let me see if I could bring this up fast. And if I'm going too far or anything, please let me know. So here's some examples. Now I have a bot that identifies this. So it automatically could take the trades and that'll follow up. So this is basically what we're looking at. Here's another example: low, a lower low, a higher low. It identifies the long and it'll take profits on the way up. Here's a great example of a sell side divergence: stage 1, stage 2, a high, a higher high, a lower high, and then a nice move down. Same thing here. Let's say I'm just looking at good examples for you. Again, as you can see, it's just a matter of identification of them, not missing them. Here's a great one right here: a higher high, a lower high, and the move right down. And these moves could be big these days. I mean, I remember trading and you get a divergence, you get a move of maybe a point or so, and you're really fighting for a point. Now you're getting out of a divergence up to 4 or 5 good points on a 1-minute time frame, just because of the volatility in the market. So it's actually a good time to trade these type of setups.
I'm curious to know what happened, or what made you decide to move into algos and to kind of try to use algos for your trading.
All right, a good question. I found out that I was missing, doing the show. When I do the show, I'm really answering a lot of questions. I'm always paying attention to the traders. So we have a bunch of chat rooms, so futures and stock chat rooms, and I'm looking at so many different things. So I've become more of an educator during the day while the market has been going on, and I tend to take my eye off the screen, and then someone will say, John, there was a divergence, and I'll look back and I'll see, oh, there was a divergence. I didn't take it. And I found out I was missing a lot of the setups because of that. So I said, I have to be alerted to these or get in them automatically so I don't have to miss them anymore. And I'm not a fan of saying throw the algo on and let it run by itself, but I want to be alerted to my setup, and then I want to be able to look at my setup and make sure the market conditions are right. I'm not getting in between some major news release or housing numbers or anything like that, but I want to have the opportunity I'm missing too many opportunities. I needed to get in, make something, identify these for me. And I also said at one point, these things were working so well that I wish I had it in me to get up at 3 a.m. when the market really starts to get active in the morning. Here in the U.S., it's very hard to do. So I've identified, what we did was we set up the bot so it emails people. They have an option we have what's called a rock bot channel, so they can actually follow the bot, or you could download the bot onto your own platform, or you could just tune in and follow the bot overnight. So you could follow it. But say you don't want to be up following it overnight, you have an option to click on as a member to get an email alert if there is a 5-minute divergence or a divergence, and you could get a text message. So my total goal was, and it never happened, was at 3 o'clock in the morning or 2 o'clock in the morning when I'm sleeping, and all of a sudden I get a buzz. I said, "Oh, there's a divergence. Let me turn on the laptop and let me take that trade." That's how much trading I love to do. But like I said, it's very hard to do that out of a deep sleep. But that was the reason I started building the bot. I said, I'm missing too many of these money-making opportunities. This is my business. I could do it during the day if I'm concentrating on it. But if I'm in a chat room explaining something and the market's moving so fast, I need to know. So that's why I built the bot.
Griffin, it's the same thing that happened to me, the exact same thing where I was traveling and I was missing too many trades. So I had to find a way to miss less trades, and I began with the alerts, and that worked kind of somewhat well. But then the second step is there a way to be able to take trades automatically? Because the alert, they're good, but if you're in a plane, if you're somewhere and you're going to take this setup, then that doesn't work anymore. So then I went into more algos, kind of partly automated, which works now fairly well. But that was kind of the same learning curve I had.
Yeah, I mean, that's great. I'm still, I'm still working on it, improving it. I love the automation part of it. I love it. I love that, we were able to do this. And, everyone's dream is to be able to push a button, go to bed, and wake up and have $1,000 in their account. But that doesn't happen. There's too many variables in the market these days that, and there's so many, like you said, you're into algorithms, and that, by watching the markets, and I could watch those markets and we could see how that market will move higher and then all of a sudden come back down, and kind of almost, if you can picture people having trailing stops on it, it's almost like the market comes down, grabs those stops, and then continues on its way. It's just like it knows there's algorithms out there. They're like sentinels from the Matrix that will run around and know where all the levels are, and they will revisit those levels and take people out, or pop. There'll be buy programs that'll trigger buy stops, and they'll get people in, and then they'll reverse. So it's difficult because this is now a battleground. The bots and the algorithms are battling it out, and it's you're trying to get a little piece of the pie inside the bigger move. Well, that's how I kind of explained it to a lot of people. We're never trying to get in at the exact low and get out at the exact high. It's so hard to do.
What would be your advice to people who want to develop an algo on their own? Should they code themselves? Should they learn to code, or what would you recommend them to do?
I didn't have any coding ability. I knew the setup like the back of my hand. I knew exactly how to explain it to someone. So what I had to do is actually reach out to a friend who's a coder, and kind of he guided me through, and I'm starting to learn now, and every platform has a different language. So I'm learning C#, I guess, is what NinjaTrader does. I'm using NinjaTrader platform, and I think they use a C# thing. So I'm learning more about that. But a lot of these things are getting user friendly. But I hired a couple of coders from Upwork, or is it called Upwork, I think? And I was happy with that. And that got me started. And then from that point on, I learned what they did. I learned their code. I looked at it and stuff, and I said, "Oh, that's how you do that." That's how you do that. So it was, it's another passion. Once you start becoming a coder, it opens up a lot of different things. So I think you got to learn it. You got to learn it. You got to learn it. If this is something you love, I would learn it more if I could. Trying to every day is a learning experience when it comes to the algorithms.
I'm curious to know, in general, what do you see the people that reach out to you or that watch your show, what do they do wrong most of the time? Where do they fail exactly?
They overtrade. They overtrade. They come in underfunded. So they're looking for penny stocks. They're looking for these very volatile stocks that they could only afford. that's tough, because everyone wants to start. Not everyone could start off with a lot of money. So you're starting off with a couple $1,000. You could open up an account, and then you're looking at the bottom of the barrel. You're trading these crappy stocks that are so volatile, and they get these pops, and there's momentum traders. Back in the 1990s, you were following these momentum stocks on these chat rooms. It's the same thing. It's happening again. We're starting to see that again. We're starting to see the second return of traders and chat rooms and, kind of momentum trades. So it's hard to get them past that. What I want to do is show them, hey, you need to concentrate on quality names. So first of all, you can sleep at night. It's not going to give you that. It's not going to give you the opportunities, but it's going to, over time, you have to build slowly, stair step your account up, stair step it up slowly. And instead of taking that big gamble, a lot of people take that big gamble. Eventually that gamble is not going to pay off. And then it's like they take 2 or 3 steps and then one big step back down. Eventually the market's going to catch you. You might be right on some of these. And once you get right, that's the worst thing a trader could do, is be successful as a beginner, because they get very, very overconfident. They think that they're unstoppable and they know everything, and they push their limits too far. They get in over leveraged, just putting in too much money into it, and they get hit and they get depressed and they fall back. And it's such a hard climb to get back up to that level. And you want to get back up to that level, so you force yourself to revenge trade. And the whole psychology of the whole trading is difficult. I mean, that's the hardest part of trading, is getting through that the great ups and downs of the market. It's really hard. I know that I could teach you the right way of trading, but eventually you're going to have to find your own way, because everyone needs that. Everyone has to find their own way. And then if you can't do that, you'll realize maybe something that, hey, Johnny taught me is really the best way. But at least I went on my own and I tried my indicators, and I tried doing this and I tried doing that. And, now that's what happens. That's what I find out happens a lot. People, they have to try their own way. I'm not telling them not to do that.
That's very good advice. So where could people find you if they want to connect with you or reach out or join the Day Trading Radio?
Oh, pretty simple. Just go to daytradingradio.com. And actually, we have a trial there, so it's just that anybody could just get on our feed. It's a live feed. It's on YouTube also. Day Trader Rockstar, Day Trader Rockstar feed. I have over 1,000 videos, educational videos, and then we have a 10-day, no credit card or anything. Just go to daytradingradio.com. You'll see a 10-day free trial, no credit card. Just put in your username, a password you want. Put in a real email, because we send you back a link to log in, and you get 10 days of trying out Day Trading Radio with all the chat rooms and all the indicators, and you get to follow the Rockbot and Tradeometer and everything else that goes along with that.
John, what are your goals for the future with the Trading Radio or something else?
I love it. I love doing this every day. It gets me, and I have my own office. I don't know if I could do this at my house, because I have two kids and stuff. I wouldn't be able to do it. So this is a job for me, and I love my job, and the community that we have, for the last, since 2007, since I've been on the air, since I've been on the air, 2007, I've got to know so many traders, and a lot of them are still with us. So it's just become a family. It's so important to trade with other people too. Trading's a lonely job, but not all your friends are going to be able. So you develop new friendships and stuff. And I just enjoy that. And we have get-togethers every year. We go to I do a lot of speaking at the Traders Expo, and we use these Traders Expos around the world to kind of meet up with our members. And it's just, I don't see anything changing other than just changing with the markets, and continuing educating traders, in the best way I can.
So I like to finish interviews with, if you could give people one piece of advice on how they can become better traders, what would that one piece of advice be?
There's probably a couple different things. I mean, a new trader, you have to have a good foundation. I think you have to learn a good foundation. Momentum trading, it seems easy enough to get into a good stock and have it run and take your money off. Like I said, a lot of people will do that these days because they're just starting out, and they'll get into the wave of the Robinhood traders and stuff. But eventually, I think that catches up to you. You can't just run that. It's like being on a hot streak in cards. There's no rhyme or reason to it. You're just being lucky. So you have to get something, you have to develop a business plan. Like I always said, identify your weaknesses. That's what I had to do. Identify your weaknesses. I was very unorganized and stuff. So I had to get organized. I had to slow down on my trading. And when I started doing that, I realized I was picking better stocks and being a better trader. So over trading, not having the force to trade, not having to be in a trade. There's so many different aspects to trading. But I would say not over trading, having a good foundation and learning some good techniques. Learning that stochastic divergence technique is a great place to start. It's not a hard thing to do. And that way it gives you a foundation to look for, and then you can build things around it. If you believe in something, say you believe in, a certain indicator, you add that to maybe something you gain from someone else and say, well, that works great. I'm going to add my indicator to it. And then you start building your own method. And then you could, start becoming successful.
That makes a lot of sense. Thank you, John. I appreciate your time and your advice. I'm sure people will like it. And I hope we'll talk soon.
Thanks very much for the opportunity.